Hello, today is Friday, the first day of August 2014. My name is Derek. Welcome to today's silver chart analysis. Take a look at this daily chart, and we'll finish it off with a Silver Eagle sold at the for the U.S. Mint. Let's go back to this breakout date. What I was stating on the video then was the typical signs of this being that of a failed breakout, and oftentimes when a big move happens, it does the failed move in the opposite direction first. But the sign I was looking for, fast move back into this range relatively quickly. A couple trading days later, yeah, that's relatively quickly. And relatively quickly after that, breaking down below support. That was another couple days. It came back to enter the range, very normal, and thus make it a lower high. And the support breaks in here. Quick move down to the significant Fibonacci level. No surprise that it bounces quickly, but again, making a lower high. On Thursday, it came back down to this level, but it didn't really bounce too much, and well, it broke down below this key support today, barely above it as we speak. And a technical analysis, a lot of people say it doesn't work, and the reason why a lot of them say that is because, well, a lot of them say, well, if it worked, everyone could do it. Well, everyone can't do it. It's a skill, it's understanding patterns, and within game theory or risk-reward management, and really gambling, you want the odds to be in your favor to the largest degree if they possibly can, which is why when people play games like this, it's often advised to understand risk-reward and take the best ones that you possibly can find. It's a casino game, and it's a game which endures, which has skill involved in it, but the average person is always going to lose because of the ranks, and that's usually the commission fees. If, of course, you play the game. I personally don't. And I'm not a big fan of who you have to make your wagers with, which are the banking institutions. Not a big fan of their policies, so I don't play the game. But we're looking at this pattern. I don't know why you wouldn't be short at this time frame. With a price objective going down here, it's making lower low, and again, I think the highest that the lower low will be in this level here. My last video on Wednesday, I said it was more likely price action would make it to the low 20s because that's where I'd expect the lower low to be, than it would be roughly around 2090, as I stated. More likely to come here first than here, and now I'll say it's more likely to come here than it would be 2070, we'll say. Or about 70% of Fibonacci from this high to this low right now. Probability odds do seem very, very high that that move is going to come into place. Risk reward? Well, the risk reward is based on where your stops would be, where you want to get out, where you plan on profit taking. A lot of times you don't even know exactly what they are. You can calculate what the probabilities of the risk reward is. But on the probability side, I would guess educatedly that the chances that it does reach low 20s over 20 3/4 is about 80 to 90%, which is extremely high. So I think within a wager, it's a fairly decent bet to be playing and to be going down on the short-term time frame. As again, you see this come into play, lower high at this level, now just holding on there a little bit. After this typical failed breakout, the signs are failed move, fast move. I don't think the fast move is complete as of yet. Again, minimum here to here. At this point, it's like, then what? I don't know what would happen after that level. I just think there's about 85-90% chance it's going to come down here. Probably more of a decent shot that it's going to be somewhere around this level. And then from that point on, well, I would guess there's a decent chance it's going to go significantly higher from here. Sort of like it did here. Up at least here. And then, of course, what does the message of the market say after that? Just have to wait and see, because you're trying to play the chess game and talking about 5-6 turns ahead. And it's not worth it. Okay, so quickly to summarize, decent chance that there's going to be a small move, or at least the next move down to this low area here. From there, I don't know. So let's move on to the data for Silver Eagles sold for months of June and July. That's what the first two columns are, with the final column being the average price for silver for that 2-month period. The last time I talked about Silver Eagles was at the end of May, and I talked about the 5-month running total for 2014 was roughly around the same as it was in 2013, thus having a neck-and-neck race going into the final 7-month for the higher number. And 2013 was a record year, so it was looking like, can we make another record year? However, look at these two numbers. Less than half of what it was last year. I don't know if the numbers are finished for the month. Don't know when the last time they added their data in. Maybe they got data from the 31st, maybe 30th or 29th of the month. I don't know. Regardless of the fact, it is significantly lower than it was last year, and it's decently lower than it was in the end of last decade, start of this one. Of course, back 2005, like, look at the numbers. Much lower, and the prices were cheaper. I look at this as in it's even more escalated amount of people that have been buying the last 6-7 years based on here, because if you're looking to buy, say, $10,000 worth of silver, well, you're going to get a lot less at $25 than you would at 10. Therefore, when prices are less, you usually get more. When prices are higher, you can usually get less, based on, of course, your fiat currencies that you have on hand. And I'm going to end the video at that, so thank you for tuning in, and have yourself a great weekend. Bye-bye.